Good morning, everybody. It is Friday, October 8th, 2021. One more week to option expiration because I know that's what we're all looking forward to. And I just got back from Door County, Wisconsin. It's a peninsula between Lake Michigan and Green Bay. And I will say it's a pretty attractive place, a lot of cute shops and restaurants, very walkable. That's what Door County is like in 5 or 6 different places, little towns, maybe 1,000 people living there year round. But during the summer, 500,000 tourists. And they're there to see Peninsula State Park, which was Wisconsin's first state park, as well as the various beaches and other things that are out there. This is actually a sunset that had some cloudiness at a lookout point. But I will say it was weird for me that there were sunsets in Wisconsin because I'm used to the lake being to my east and the sunsets always just being over the regular horizon, not over the water. So here you can actually get a sunset over the water because of the peninsula that it's on. And the land that you see way back there are bits and pieces of Michigan there, I believe. And then this is Marinette, Wisconsin. So you have several miles here. In any case, pretty good looking place. Did not really get the fall colors just yet. The colors are setting in about 2 or 3 weeks late again this year. So I don't know if that's climate change, something weird beyond that, the aliens that I keep talking about, or what's going on. But the leaves were not quite in full color just yet. The water on the lake, though, is about 6 feet too high, and I actually had a good video of that. It's interesting to me that we're at the low part of our water cycle, and we're 6 feet over the normal low part of our water cycle. So as I've been talking about for at least since 2012, the water from the Arctic is melting, and it comes down through all the different waterways from the Arctic all the way through Canada to the Midwest, the Great Lakes, Devil's Lake in North Dakota filled in. You're really seeing a lot of fresh water come into the system from the north. The problem is what happens after all that ice is done melting. I don't know, over my pay grade, but I can't imagine that's terribly good. So this week, I wrote an article, the macro dashes piece. The last oil bull market is here. So what? And there's this idea that people should be investing in oil stocks and things like that to take advantage of high oil and gas prices. And I would argue that that's just a stupid way to invest, mainly because the balance sheets of the American frackers are so bad that, as Scott Sheffield, the CEO of Pioneer, said, there's probably only 5 viable companies. 5 viable companies. Think that through. And Pioneer would be my favorite among that list. Hess was one of the companies he mentioned, and I think they're viable as well because they have divested a lot of assets, and they're relying largely on Guyana in the deep water, a place where there's not a lot of regulation, and it turns out that the oil find is pretty good. So they can limit their input into going after that oil, find the best parts of the play, and have an oil resource that they can run out during this end of the oil age. And the end of the oil age began way back in 2014 when Saudi Arabia pretty much very loudly announced that it was ending by flooding the market with oil, crushing a couple hundred oil companies, and then doing it again in 2019. So when you take a look at the end of the oil age, you say, well, oil is going to last 50 more years. Well, yeah, sure. We're going to be using oil till the end of the century. However, we're not going to be using 100 million barrels a day. And depending on whose estimate you look at, peak oil demand is in the next several years to maybe in the 2030s. Everybody's estimate. Nobody has oil demand rising past about 2040. Most of the companies have multiple scenarios where oil demand might stay level until about 2040. but most of them also have scenarios where oil starts to fall off dramatically in the 2030s. I'll show you one of those in a second. So when we think about energy investments, and I agree with Shamit, I think that the change in the energy system is maybe the biggest thing going on over the next 10 years. We shouldn't be looking at oil and gas stocks to invest in, because if oil and gas prices stay higher, do you think the oil companies who are largely in debt are going to do the best? Or do you think some of the clean energy and alternative energy companies are going to do the best with better technology and secular trends on their side versus worse technology, running out resources, and secular trends against them? It's pretty obvious. So for all you folks who still have oil and gas investments, for all you that own Exxon, have mercy on your soul, because Exxon is going to lose half of its value again in the not too distant future. I've been right about that 2 out of 2 times. It's coming again. So what happened here? Oil finally reached $80 a barrel after years of OPEC manipulation and hundreds of U.S. oil bankruptcies. The current oil rally will be short-lived into next year, maybe the year after, not much longer. And it's not really going to go much higher unless we get a very short-term spike. Why? Well, let's walk this through. If you haven't read this article, you should. It's available as a free library card article on fundamental trends. Get it for free. Just log in. The EV revolution by 2026 or 2027 is going to be kicking into full gear. At that point, demand for oil will stop increasing. Might stay level for a while, but will stop increasing within about 5 or 6 years. And it could be sooner because there's other technologies that are eating into demand for oil. We also have the potential for a supply shock. What if oil producing nations decide, hey, we need to get this money in our pocket, we need to produce more, while at the same time keeping price high, right? So it's a balance that they have to find. And what will eventually happen is that the oil and gas rich nations, they'll transition to clean energy a little slower in most cases, because what they're going to realize is that, hey, this is our cheapest way of having energy at home. So the oil and gas export markets will dry up, on oil probably by the end of the decade, and on gas sometime in the next decade. And why is that? Because alternative energy is coming really fast. If you've been following along in the chat rooms, you know that there are some investors here who are talking about some of the battery technology that's out there. Some of the battery technology doesn't even use rare earth metals anymore. Now, the problem with those companies is that the storage capacity, the amount of time that those batteries can hold the charge, isn't terribly long, but it might be enough to bridge us day to day. And if that's the case, between the flow batteries that are out there, between the different types of nickel batteries, and now the lithium batteries obviously getting much better as they change the chemistry, you could see batteries of different sizes for different purposes, with different durations, different levels of safety, filling in all the gaps where we need batteries. So as the economy becomes more electrified, and it's happening fast, you have to ask yourself, how long can oil and gas hang on? A report this morning on Bloomberg said that demand for coal is actually going to start dropping again globally after a little push higher from China and India, because both of those countries realize, hey, this is really dirty. Solar is cheaper. Wind is cheaper. Why wouldn't we just build out a ton of solar and wind? So during the time that build out occurs, which is over the next decade or so, by law and by finance, by government edict, all those things pushing in that direction, you have to ask, when does the market adjust? When does the stock market say, oh boy, storm clouds on the horizon for oil and gas stocks? It's not that far away. Will the taper be something that spurs it on? Will we get some wavy lines on the way down? Probably. But if energy for the next few years during this transition is going to be a little more scarce than we'd like it to be, a little bit more expensive than we'd like it to be, who's going to be big winners? It's not going to be the oil and gas companies. Again, economic headwinds. You have to think relative performance. The oil and gas companies are going to suffer from something like this: shrinkage. Remember George Costanza? Just got out of the pool. The cure for high oil prices is high oil prices. So this is really the history of oil since the financial crisis. OPEC knows that a high price of oil leads to a collapse, both economically and in the markets. And clearly the financial crisis had more to do than just oil, but oil seems to follow this along. Oil price goes up, economics does all right, and then economics has a crack. Why? Because the economy can't sustain super high energy prices. So price of oil came back up with all the quantitative easing. Then Saudi Arabia, pow bam, floods the market with oil. Starts to stabilize here. And I predict the price of oil will get back to $80 a barrel right there. October 2017 is when I said it. And over the next year or so, it got almost there, got into the upper 70s. Then President Trump did something that I didn't expect, that Saudi Arabia certainly didn't expect. He backed off the Iran sanctions. For all the tough guy talk, that made a lot of people think, well, what's going on? Well, it was a very politically astute move. He knew that his best way to win in 2020 was low energy prices in a roaring stock market and good employment numbers. So do what you can to juice things. Cut taxes, get energy prices cheap. Almost pulled it off. Energy prices fell. 44 North American oil company bankruptcies happened within a year after that. Oil started to stabilize. Coronavirus crash. So OPEC tightens the spigot in response to COVID and drives the price of oil way up here. Now, when you take a look at supply and demand dynamics and the fact that oil inventories are still high, people like to point to the fact that, well, it's below the 5-year average, right? But the 5-year average was way higher than the previous 5-year average. Our 10-year average for oil inventories is still way high. So you have to pick your time frame. Do we have a lot of oil or don't we? Well, the traders want to say that we don't. Well, it's below the 5-year average. We use the 5-year average. Don't look further back on the chart. There's no shortage of oil. And again, you have companies and countries that need the revenue. And if oil prices can't really go up for more than a hot minute, what are they going to do? They're going to pump more. So that balance on oil price, supply and demand, we're going to be in this weird place called equilibrium probably for quite a while. Here's the EIA forecast for the oil price. Like I said, for a hot minute, it could go really high, but pretty easily it could come pretty far down. They think it could go back into the 30s possibly. Crazy wide range, right? Here's the official predictions. NYMEX is saying this, and the short-term energy outlook from the EIA is saying this. 60-something oil. How's that going to work out for oil companies trying to pay down hundreds of billions of dollars of debt? If the price of oil doesn't go up and volumes don't go up either. For basically the last decade, we've known that oil demand growth was about 1% per year, 1% and falling. So in the face of more EVs and other things infringing on oil demand, what would we expect? Well, this is BP, British Petroleum, saying that the best case scenario for oil is this, but that this is probably what they expect, and this could happen. You could see oil demand just fall off a cliff by about 2030, which is what I've been telling you. Because the rules on cars are changing, mileage requirements are going up. By 2026 or 2027, according to the people in the car industry, the executives and the engineers that I talked to at CES in 2020, so this isn't new information. We've known this since January of last year. There is no way to meet fuel efficiency standards with gasoline cars. or diesel. Can't be done. We've seen 2 scandals on diesel in the last decade where they lie about the mileage and the cleanliness. Do you think there's a big future in gasoline and diesel and jet fuel? Well, I'll tell you what. Jet fuel is already finding some substitutions. Amidas, company that I was telling you around July 19th, at around $10 a share for a couple of weeks, I was pounding that drum. Showed you the presentation. If you haven't looked at the presentation yet, you should. 188 pages on carbon capture. These guys take carbon out of the atmosphere at dairy farms and they turn it into jet fuel. They just cut a deal with Delta Airlines. They just built new pipelines. Not a little deal. Stock's up 70% in 3 months. Now I expect it to pull back. You're going to want to own it because they have first mover advantage in California and they're going to expand to other states. Where else is there cows? Moo, Wisconsin. I'm telling you, I've met the guys, the boots on the ground. They're getting into this business. They're here. And they'll probably end up in Nebraska. They'll probably end up in Iowa. Wherever else, there's pigs or cows, maybe chickens, I don't know. Natural gas power plants, coal power plants, sewage treatment facilities. This is the type of technology I've been talking to you about for 6 or 7 years. Remember New Light Technologies I told you about? Created air carbon. They've been spending the last decade getting it to the point where it's efficient, where it can be as cheap as plastic. Well, they're there. So these guys take greenhouse gases out of the air. They're also at dairy plants, and they turn it into plastic pellets. It's actually mimicking a natural process. Look who's on the front page. Moo. So if jet fuel is going to come from captured carbon, if plastic's going to come from captured carbon, if cars are going to go EV in the short run, I think there's some hybrid strength. Where would oil demand come from? From nowhere. You'll get some countries that use their oil and gas at home because it's cheap enough. But there aren't many countries like that, is there? A couple dozen. Most of the world imports oil and gas. The United States, we're lucky that we got plenty of both. And if we had to, if there was no alternative, we could frack the hell out of the world, let it warm up 7 or 8 degrees, and we never have to heat anything again. So fuels, plastics, lubricants, petrochemicals, technology has changed the game. It's not 10 years away. I've talked to you about 2-year and 10-year projections. When there's hype, everybody thinks that something's going to happen in 2 years. A lot of times it takes 10. When people think something's going to take 10 years, they don't bid it up. It's not close enough for them. The whole hype cycle and the emotions of chasing, FOMO. Oh, look, it's going up. I better buy it. And chasing things up 3, 4, 5, 600% when the earnings outlook justify much lower happens over and over again. The other thing that happens over and over again is people don't do their homework. 80 to 90% of people, and ask yourself this true question, do not read the corporate reports or even look at the nice PDFs that are out there. Ask yourself, of the companies you've invested in the last year, have you at least read the investor presentations, which is the bare minimum you have to start with. If this is all you have time for, I get it. I use the AI to scan all these for you. But no matter what, you cannot make an excuse, say I don't have time to read the investor presentation. You can do that while you're watching a football game. You at least have the cursory knowledge. Jim Rogers was interviewed by Fortune magazine years ago. And they said, what is the most important investment advice you ever got? And Jim Rogers told the story and said, well, I was on an airplane once, sitting next to another investment guy. And I asked him, give me your best piece of advice. How can I get ahead in investments? And he's never disclosed who this guy was. Might have been a nobody. Might have just been some random Wall Street guy. I don't know. And he says, look, if you just read the corporate documents, presentations, the SEC filings, then follow up by learning about the industry through the trade mags, you're going to know more than 99% of the people out there. And you're going to make a lot of money. Because most people operate from, well, I heard this. This one looks pretty good. I have a gut feeling. They don't do the research. When I pull up the AI, it's going to tell me a lot of things. Nice dashboard. I press this button. I say I want to do a document search. And I say Ametis Energy. And I say jet fuel. It finds me every mention across thousands of documents. It highlights it for me. It helps me figure out what I need to know. Let's do this search. Delta. There you go. How fast was that? So we now have the ability, and it should mean that we don't have excuses. We now have the ability to not only look at the corporate reports, but we can scan basically every document that's out there, and I get all the mentions today. I even get the tweets. I get the social sentiment. So if you take a look at the things I've been telling you this year, you should realize we're pretty informed on what we're doing. Told you all about Mark Lazary, owner of the Bucks, was a partner in Fortress Investments. His new company is New Fortress Energy, right here. Liquefied natural gas. What sets them apart, though? Because there's that liquefied natural gas is out there already. Well, first of all, they're serving underserved markets, mainly in the Caribbean, but expanding around the world. And they do something that nobody else does. Not yet, anyway. I mean, Qatar might have one. They don't need a gigantic Sabine Pass style liquefied natural gas facility. They have a giant ship that just floats around, goes to where the wellheads are, turns into liquefied natural gas. Floating liquefied natural gas factory. If you've been watching the news, they've been cutting deals. Those deals, now, I first mentioned them back here, said let them get down in this price range, and look what happened. Hits it a couple times. I told you sell puts. They were in the retirement income options. Company pays a dividend, by the way. It jumps up. Now, it'll probably retrace to 30-ish. You should sell puts and get a starter position. Probably get that opportunity in the next week or two or three soon. But don't get greedy and think it's going to set a new low, because I don't think it is. Let it come off the daily overbought. It's not even overbought. Let it come back down a little bit. In here, make sure you get some. Again, they pay a dividend. This is their hype cycle. It'll take them a while to get back up there. I think this is a pretty easy double. What's their backdoor play? Everything I do has a backdoor play, or two. Mergers and acquisitions is always on my mind, because I try to think of these companies like I was the CEO or the owner, right? The private owner or the CEO. What can I do with this company to make it worth a lot more? So I get uber rich, right? I mean, Mark Lazary's already uber rich. He's a smart guy, took his own money, said, hey, why don't I IPO this idea, see what I can make of it. I think the upside for this stock is way over 100. Again, the backdoor play, and it's in the business plan, you can read about it. It's at some point to sell off the fossil fuel investments, let somebody else wind them down over time, then use the facilities and the connections and the network, the right-of-ways and everything else comes with it to get heavy duty into hydrogen. And we know, again from CES 2020, the hydrogen is going to play a big role in two things. What are they? I mentioned it in the article. Heavy transportation, truck, ships, and trains, as well as utility scales energy storage. There's so many different energy storage technologies coming at the market right now. Between the technology, the money, and the competition, the price is coming down pretty quick. You're going to see solar energy, probably by 2040, providing half of all energy on the planet. And it's not just half of what we use now, it's going to be half of what we use then, which is going to be 50% higher, down from a number a little under 10%. So that means that you have about 600% plus growth potential on solar into the next decade. 600%. Would any of you mind 6xing your money by the end of the next decade? Or is that not fast enough for you? Annualized compound growth rates around 30%. Superstars like Warren Buffett have averaged about 25% over their career. They've not been that good lately. It's because as you get more and more money, it's hard to manage. When you get to 100 billion, it'll be a little harder to manage. But until you make that first billion, you should have plenty of room. You get what I'm saying there, right? Warren Buffett once said that I could make 50% almost every year if I only had $1 billion to manage. Well, he said 1 million, but I think he said 1 billion. I don't know about that. Maybe he can. I don't think I can. But if I can make 20 to 30% on average, which I have in my investing career, when you take a look at these companies that I've been giving to you lately, the satellite as a service companies, you better wake up, because the changes in technology, the changes in capital flows, largely driven by legislation around the world, especially from the big economies, Europe, China, India, Japan, United States, which is something like 85% of all economic activity on the planet, are telling you this is what's coming. And it reminds me of something that my grandfather told me when I was in college. He said, Kirk, if you want to make a lot of money, lay down in front of the baby boomers because they'll make you rich. He was right. Depends on your perception of rich. But I'm a borderline 1%er. What I'm telling you is I did it very simply. I saw the big trends. I got involved with the companies that were in those big trends. And I tried to find leaders. And when I couldn't find leaders, I bought baskets of companies that were competing, and I let them duke it out. That's what I'm doing with the satellite as a service stocks. Of the four that I own, I don't know which one is going to be the 100 bagger. I don't know which one's going to be the 10 bagger. I don't know which one's going to be flat. I don't know which one's going to get bought out. Execution, management, all that stuff plays into it. Who gets lucky? Who gets a government contract? But I know that basket's going to do really well. And the fact that all 4 of them are SPACs, they came to market quickly because they realized how big the opportunity is. And for all the people who are pissing on the SPACs, you should really take a look at what the actual results were. I showed them in the chat room. Of all the SPACs since 2019, they had a merger deal. Their performance is basically in line with the S&P 500. And that's with the collapse and the bias. People who don't want to do the work, who don't want to actually read the corporate reports, who don't actually want to look into the industry. And I'm not saying they're all good deals. What have I told you? I've told you that 80% of the stocks in the stock market aren't worth your time. It applies to SPACs too. But of that 10 to 20% of companies that you should at least give a cursory review of, SPACs are in there too. So let's get back to energy. What will be the impact on U.S. oil companies with so much transition to alternatives? Well, let's take a look at the last 5 years of XOP and XLE. That's these two, the last 5 years. And these are 3 clean energy ETFs that are on our list. Okay, let's just take a look at the last 2 years. Okay, what does that tell you? Relative performance, right? Clean energy stocks are kicking the ass of the oil and gas stocks. Let's look at just since the coronavirus crash. This is the absolute bottom over here. This is XLE, which has Chevron and Exxon and Baker Hughes and all the other big companies in it. And this is the oil and gas producers fund, E&Ps. And it almost keeps up with our top clean energy picks. And I have a question for you. Do you think this will keep up? If you do, let's go to Florida and I'm going to sell you somebody else's swampland. This is a trader-driven rally and it's going to turn over. If the CEO of the best domestic oil company out there, Pioneer, Scott Sheffield, is telling you there's only 5 viable companies. And it was Pioneer, Hess, Conoco, which I talked about 5 years ago being smart to start selling stuff. And everybody said, oh, they should be selling everything. Turns out they were smart to be selling stuff. I think it was Marathon might have been the other one. And I don't remember who the other one was. But it wasn't Continental. It wasn't Whiting. It wasn't any of the Colorado-based companies. The only American oil companies that have a shot are the ones that are almost pure plays or very gas rich in the Permian. A couple gas plays in the Marcellus and Utica, they'll do all right. But your Bakken companies are basically running out the clock. Niobrara, they got big problems. Oklahoma companies got big problems. So Permian actually offers a little bit of growth. Still the best play out there. Nobody's even really comparable. Bakken, because it's basically a bowl of oil and they're just siphoning it out. That's how the formation works. That's just a mathematical equation. There's no new exploration really be done there. There's just got straws in the ground sucking it out. But all the other plays in America, including Alaska, it's just too expensive. Just solar and wind and turning cow farts into jet fuel. It's cheap enough now. And we're almost able to turn cow farts into plastic. So this idea that you should even think about being an Exxon or Chevron or the big oil plays, and be real plain about this. It's stupid. And pick your reason for it being stupid. Ideological bias, inability to see the trends, haven't done the homework. So New Fortress is kind of a flip sort of investment. From natural gas because it's necessary, and it's half the emissions of coal, to hydrogen eventually. And maybe other things. Who's to say that they don't get involved in carbon capture? And the fast movers, the quick movers, the first movers, over the next few years, are going to make a fortune. Ametis is one of those companies. I'm convinced of it. I've put several months into watching this company. And I've put off interviewing the CEO, even though he gave me his cell phone number, because I wanted to do the reading. I wanted to ask the smart questions. And the way that you should think of what they do isn't renewable fuels. I actually don't like the term, and I'm going to tell them that. Recycled. This is recycled carbon, is what it is. So you don't have to pull it out of the ground. You can say, well, the cows are making the carbon, the methane. We'll capture that, or we'll capture it from a sewage treatment plant, or from an existing coal or gas powered plant. We'll capture that carbon, we'll convert it into jet fuel. Maybe we'll sell some to New Light, and they'll turn it into plastic. And the rest we'll sequester in the ground from where it came from in the first place. And by the way, we're going to help plant millions of trees. So I also put up in the last week our game plan. I'd encourage you to read this. The unemployment number came out today, weaker than expected again. And there was an analyst on Bloomberg who said, look, seems to me that this is structural. All the old arguments about, remember 10,000 baby boomers turning 65 every day, right? That was the big pitch when I was a broker. Hey, 10,000 boomers are going to start turning 65, get their rollover money. I'll tell you, the millennials are way better traders than the boomers. The boomers would be smart to put their money with guys like me who use ETFs and buy a basket of stocks for the long term, so they don't panic sell. Because a study just came out that said old men are the most likely to panic sell. And I don't know all the reasons why. But if you do what I've been telling you, which is build a basket of ETFs for your diversification and directed asset allocation, right? Diversification, you don't need a lot to be diversified. 200 stocks is plenty to be globally diversified. You can't possibly manage 200 stocks by yourself, though. You probably get by with 100, but I tell people 200. That's what the charts say. And if you're going to be a global investor, it's probably closer to 200 than 100. Go to Bernstein's website. They talk about it. But if you want to juice your returns, add that 20 to 30 stocks that you've done research on and that you keep track of. You understand the business models. I go roughly half ETFs and half stocks. I can buy 4, 5, 6 ETFs for half my money, ebb and flow, trim, trade those once in a while, take a little profit, then buy back in. You know, never really selling all the way out. That's why I still own some PBW. At some point, you just have to have a core allocation, a piece that really you don't change. Then when the price goes down, you add some. When the price goes up, you take it off. Very slow-handed. This bed taper is going to mean something. And I don't know if it's going to be as nice as people think, because I think they're going to try to do it fast, and then they're going to jam on the brakes because there's an election next year, and the economy just isn't recovering that fast because we've got at least one more wave of COVID to come through. And what we're learning is that the vaccines really do need to be updated, just like the flu vaccines, because we continue to be stubborn about getting vaccinated and wearing masks. So there's going to be variants. Those variants are going to break through. And our antibodies aren't going to be quite what we need them to be. My guess is we get an updated COVID shot every other year. That's what it's looking like it's going to play out to be. And this pill that just came out from Merck, I talked to you about this pill right when they started the research, because I told you about the little company out of Florida that was kind of behind it. If you read the research that's been out so far, that little pill only cuts your chance of hospitalization about 50%. It's not a vaccination. It's a way of keeping the symptoms from getting horrible about half the time. That's not good enough for me. I mean, I'll take that pill if I get sick, but give me a shot. I get a flu shot now every year. I'll just get the COVID update with it. There's companies already working on doing that. Moderna is one of them. So is Pfizer. So take a look at the plug and play stocks. I've mentioned several companies today, and every company on that plug and play stocks list has had to go through here. I don't publish all of my notes. You know why? Because it would take forever. I tell you why I'm doing things. I take you to the water. I'm not going to force feed you. I'm not going to shove your head in the water with 3,000 words, bang you over the head with it. Be a grown-up. Be an adult. Do a little research. It's your money. Take the time. I can get you to the pond. I get you to the lake. Take a little time to drink. At a minimum, the company presentations. At a minimum. Any questions about this energy transition? I did like some of the things I wrote in here. I think that they hit spot on. This is what I said about the Fed taper, by the way. I don't think they're going to finish it. They're going to ramp up quick, and then they're going to be done with it by spring, I think. I don't know if they raise interest rates till 2025. Again, the dollar is so strong. The dollar has so much strength underlying it. Nobody's close. Right? Somebody mentioned Ted, the dividend sleuth, mentioned that Scott Sheffield says Pioneer, Parsley, EOG, Conoco, and maybe Hess would be the long-term survivors of U.S. oil companies. And Pioneer bought Parsley, correct? Because that was the son's company. So you've got EOG, that was the one I forgot. Conoco, Hess, Pioneer. If you're going to invest in a U.S. oil company, and you shouldn't, at least make it one of those four, right? Pioneer, I think, is the best one out there because they are the biggest pure play in the Permian. They have no other assets other than Permian. They have other mineral rights. I think they're going to be producing natural gas long after they're producing oil. Any questions about Amidas or New Fortress? You need to be looking for the dips to buy these companies because they're first movers, they're technology leaders, they're in the right place at the right time with the right financing and the right management, with the secular trend at their back. If you only want dividend stocks, buy New Fortress. If you want the leader in carbon capture in the 13th biggest economy in the world, also buy Amidas, right? Got to remember, California, 13th biggest economy in the world. It's a big deal. Even if Tesla moves out for tax reasons. I love that Elon Musk is helping change the world, but tell you what, that guy's got a financial comeuppance at some point, I think. He avoids a lot of taxes. He's one of the richest guys in the world now. Pretty much all of his money has been made because the government backed him. Gotta think at some point, gotta pay the piper. We'll see. All right, have a great weekend. The Brewers' journey to the World Series begins today. Have a good weekend.